Good afternoon, ladies and gentlemen. The time right now is 11:23, and I do not have any intraday trade running. I took a minor scalp sort of a trade in the first 5 minutes, and on the Nifty, and that was the end of that. So within about a minute, I was out of the trade. Simply because at this point I'm more or less on a break. I'm going to take it a little bit relaxed because the way I see it, there was this tremendous IV crush into the up move, and as of now, premiums are very, very less. So the risk to reward is not great. Yesterday, um, the 18,000 straddle was trading around 180 rupees or so. And with that, we saw so much volatility. We saw upside break and then a rejection and then a downside break. And then again, this morning, we opened with a big gap down. So it's not like the realized volatility is coming down by a lot. The premiums just don't justify it anymore. I mean, these are the prices of options, the current prices, what I would expect on um, an expiry given how things were. But yeah, there's just not much premium. But despite that, we see a lot of volatile intraday moves, and the risk of gap hasn't exactly come down considerably. So I am not exactly going to be taking many intraday trades. Maybe on Thursday I will take a mild trade just to because Thursdays those options will go to zero. So very unlikely that I get caught in too big an IV spike. But otherwise, I'm not very interested in this period. And I think also after it's been a while since I took my last proper break, so little bit of a relaxation period is the way I see it. Meanwhile, I can do stuff that's not super intense, which is why. Okay, so first of all, let me go over what happened to all of my trades. I had some covered call positions open. So I had sold the Bank Nifty 40,000 call. This shot up till 400 when we made a high yesterday, the call option. But it doesn't matter because I way more than cover. If you look at the in my portfolio, the banks that I hold and my bank Bs that I hold, I way more than cover this 150 position size. So literally this can go in the money and it doesn't matter to me. But today into the down move, little bit expecting 17,800 to act as a support, which is why I've converted this position into a triangle. Nifty position as well. Sorry, Infy I'll come to at the end. ITC position as well. We made this up move when we were breaking around 240. I had sold the 260 call option at that point for 3 rupees. As we broke 260, this call option became at the money. Actually, I can just hold it till the end of the month and roll over. But what I've done is I converted this call option sell into a straddle position, added one more straddle position, and sold the 270 calls. Now you have to understand in this period, my shares, almost 4,000 shares, have gained also by 20 rupees into the up move. So this is how the position looks. Yes, it looks like it's naked on the upside, but that's also because I cover this with my shares to some extent, not completely, but to some extent. And the size of the position is so small. And if you see my margin used, it's so small that even if we do have like a big breakout up move, I'll be able to manage it. So it all comes down to margin management. How much of an up move will it make? Even if it makes a 10%, 15% up move, I can come out of this trade without losing money simply because my margin used is that size on this particular trade. Now, ITC, I have Larsen. Larsen also, I sold the 1900 call. That is bleeding a little bit. Once again, great portfolio is doing well. These call options are bleeding a little bit. And I will manage this if this call goes at the money. As of now, it is still out the money by 50 points. So I will wait for a situation where it is at the money. And then I will try to trade, try to do an adjustment. Reliance, I had sold this 2700 call when Reliance was trading at about 2,550. Then we had an up move, didn't do anything, didn't have to do anything. And now we've seen a little bit of a downside on Reliance. And into that downside, just as we were at 2,600, I sold the 2,500 put, converting this also into a triangle. I did this, all these, so Bank Nifty put sold today, Reliance put sold today, Nifty put sold today. So Nifty position as well, I had 18,200. I had 18,200 calls short. Yeah, I had this 18200 call short, which I shorted for 108 when we were at 17500. Yesterday, these went up, I think almost till 200 plus, but that also once again covered by Nifty Bs and my entire portfolio. So it's not like I'm covering every share. And generally, whenever I sell calls against my shares, I wait for an up move, a breakout, and into an IV spike, I sell my calls. So that makes it far more likely for my calls to go at the money or go in the money, because I'm not doing it at every level, especially when they're oversold. Like if you watch my previous videos, you know that I used to have HDFC Bank, HDFC calls sold, but into this entire down move, I just didn't sell calls, and yeah, that's kind of how it works. So you need to wait. A covered call is kind of like a rental trade, but you don't want to do it all the time. You want to do it when you think, okay, the stock is moving up, there is an uptrend, so there is a little fear on the call side. So the premiums at further away strikes also will be worth something. So okay, so that is that. Now I've also taken a trade on Infy. Now, what is this trade on Infy? Infy has an IVP of 95. Its results will be out in 1 week from now. So on the 11th is Infy's results. I've basically taken a short IV trade, and what I've done is I've shorted every straddle at the money plus minus the next 4 strikes. So I've just shorted, you can see from here, um, 17600, sorry, the 1760, 1780, 1800, 1820, 1840, 1860, 1880, 1900, 1920. So I have shorted all of these straddles, and because in case there is some kind of ridiculous move, I don't want to have a unlimited risk situation on this trade. I've also purchased these hedges all the way out here. So this is more or less the trade. The idea is that whatever IV crush, I mean, provided there is an IV crush, I will benefit once the results are done, provided, of course, there isn't much of a move. So I'll show you what range I'm getting. Right, so going by the recent range, even if you go by the swing high, and one can eliminate this Russia-Ukraine situation, because most of the time this hasn't really been a bit. I mean, after this, market has moved up tremendously, so can eliminate this part of the range. So if you see the break evens that I'm getting, it is about 1720 on the downside, and on the upside it is same as the recent high that we made. So I have 6% on the downside, 6% on the upside, and this range will give me enough time to make any changes also. And if you see my margin used on this trade, it's about 12 lakhs. So it is actually an insignificant kind of sizing, wherein it really doesn't, I have enough and more margin left over to manage this trade any which way it goes. So yeah, couple of small trades entered. Apart from that, I personally right now, I think that the risk and reward for short IV intraday trades is just not worth it. So I would rather take a back seat. And also I feel like the market has been, it's difficult to be perfectly in sync with what is going on. The moves have been quite big, and yeah, I don't think it's great risk to reward. So that's more or less it. That's the summary for the day. I hope you had a good trading day. I hope you've been having a good trading week. Those of you who have been investors and your positions, your holdings are in profit, I would think definitely consider selling some out of the money call options. I mean, if you did it like in the past 2 days, great. If not, I think even now you can sell a little bit out of the money call options, and provided you know how to manage them in case things go off. I think the idea should be, whenever, based on whatever metric you think some holding of yours is way overbought and that potentially it will dip at some time, you don't have much to lose if you take an out of money call option short. And in case there is a continued up move, your overall portfolio will benefit much more before you then start having to manage that position. So that is about it. And this is just a quick update on what's going on. I will keep people posted on Twitter as to when, if and when I start taking trades again. I might take a week off. It might be 2 weeks, but a lot will depend on how the market is positioned, what the risk to reward is looking like, and how sync I feel I am at that point of time. So that's about it. Thank you so much for watching. Have a great day. I'll catch you at the next one. Bye bye.